And the star of the show today, he is a real estate investor himself. He's the head coach over at Roofstock Academy. He is an accomplished outdoorsman, surfer, snowboarder, whitewater rafter. I think he just got off of a whitewater raft right now to come on the show. Diver. He does all sorts of cool stuff, and I'm dying to be his friend. And guess what? It's happening. Michael Albaum, welcome to the show, bro.
Thanks so much, guys. You forgot to mention professional dog puke receiver as well. Let's add that to the resume.
Podcaster that is immune to dog projectile vomiting. Total pro, folks. Michael, welcome to the show. We are pumped to have you. Michael, we like to start this idea, remote investing. Why is it so important? Why do people need to know about remote investing, Matt? Talk to me.
So I think remote investing is such a critical part, and if it's not already, should be part of everyone's investment plan, because if you're only investing where you live, you're really limited. And that was really how I got started. It was expensive where I was living, and it just didn't make sense. I didn't understand it. I couldn't break into that market. And so I said, okay, if I can go to another market and do the thing that I'm already doing, and figure out how to do it, it's open, the world is your oyster. Literally, the world becomes your oyster. And so I get my start investing in Southern California, actually, where Rosalind is calling in from, in Marietta, California. Believe it or not, that was my very first investment. So it was like 3 hours south. The Inland Empire, exactly. Yeah. So it was like 3 hours south of where I lived. I grew up going there as a kid, so I knew the market, but it wasn't in my backyard. And so I said, let me take this thing, real estate investing, that I just learned about for 2 years, and give it a try, and we'll see what happens. And that really started kind of the domino effect as, well, if I can do it 3 hours away, I can do it 6 hours away. And if I can do it 6 hours away, I can do it 10 hours away. You do 10 hours away, you do a different country. So it really gave me the confidence to expand my horizons and expand the purview and scope as to where I physically could invest. Because investing, the principles are the same. Anywhere you go around the world, they're the same. Basics, fundamentals are the same. What you're changing is just the locale and the local players on the ground.
When you're getting comfortable in the worst case scenario, are you comparing it to another scenario, right? Like we've been having this conversation right now. How do we make the feeling part of it more comfortable, right? Like there's numbers and then there's feeling. And I'm trying to draw up all these different scenarios that we can compare the most uncomfortable part of rental property investing. Are you comparing it to other things, or are you simply just thinking, okay, six months without a tenant, that's going to cost me 10 grand. But the chances of that, are you going actuarian of just figuring out a percentage of that happening and then plus the upside? Is that what, are you comparing it to itself, or are you comparing it to other things?
So I started comparing it to itself, and it wasn't until I had additional rental properties that I started comparing them to each other or to other alternatives. Mm-hmm. At the time, I was like, oh, cool, I'm going to make $200 a month on this. That's awesome, because that's more than I make from other passive investments, which really didn't exist at the time. I had stock market stuff, but I wasn't investing in dividend stocks. So I was like, $200, awesome. That sounds like a good number. If I do that 10 times over 10 years, that'll be a good number. That feels good. It wasn't until I started owning additional properties, I was like, oh, well, I make $200 over here, so this property only makes $50 a month. Why don't I just go buy another one that makes 200? So I think you have to start somewhere. And so I think that's what a lot of folks in the academy, especially newer investors, do, I think, to their detriment. They hear people talking about making $200 a month passively, or they hear people making 10% cash on cash return and compare themselves or those investments to other investments. And it's like, wait a minute, no, just get started. Pick a number that's good for you and then go do that. And then the next one, do better than that. And the next one, do better than that. And so don't worry about what other people are doing, because they might have things that are going on in the background that you have no idea about. They might be doing it for longer. So pick a number you're comfortable with, then go make that happen, and then improve from there.
Could you help people understand what they should be looking for and tie it to maybe what their cash flow goals are, or what their appreciation goals may be? And how would you help them choose the right market for themselves?
Totally. Just to take it one step back, right? And talk about that $25 cash delta, get Chipotle 2 times less that month, and then you made up that difference. So I think, again, kind of getting back to your question, Paul, was people looking at the investment as this standalone thing. Well, yes, I think that's important to do. You also have to take in the greater perspective of your life. What does that $25 mean for you in your life? So It's often, like you said, it's just such a minor point. But so talking about markets, I think the investment lives and dies via the property manager. I've said this for my entire investing career, because I've seen it go both ways, both really well and really poorly because of the property manager. And so I think you have to get really clear on what your goals are. because you have some people that are investing for tax benefits and they don't want cash flow. Cash flow is actually bad for them. And so they're picking a particular market. And so if you're sitting around chatting around with this person about investment properties, you're like, oh yeah, this market's great, but their goals are completely different than yours. And so you have to get really clear on, okay, what am I trying to accomplish? Why am I investing in real estate to begin with? Is it even the proper investment vehicle for me? Because by the way, it might not be, depending on your goals. And so I think once you get really clear on those, then you can start to identify, okay, these are the markets that support those goals. These are maybe kind of the middle markets in between my goal and maybe a different goal. And here are the markets that just don't even come close to having the type of inventory for me to accomplish my goals. So it really runs the gambit. And in a lot of markets, by the way, you can find, and I'm sure you guys know this, like you can find in one market cash flow properties, appreciation properties, and kind of balanced properties in different submarkets within that same market. So it doesn't have to be a completely different market. Maybe you're just not looking in the right neighborhood, or maybe you're not looking at the right street or the right block, because some markets are so hyper local like that. And so, and then getting with a team that can tell you and kind of guide you, hey, this is where you have to be looking, because we can all look at Zillow all day, every day, but until we get down to the nitty gritty details, I mean, it's tough to really pull the trigger.
Yeah. And I love what you're saying as far as how important the property management decision is. Most people just totally, keep that one for after they chose the market and after they chose the property. And then they're like, oh, I'll do a Google search and I'll find somebody. And that's just totally the wrong way to be successful in this asset class. That's the reason why a lot of people actually have a negative experience in rental properties. They try it one time and then they'll never do it again. It's because they flip that on its head. Could you talk about some of the things? And I'm not so familiar with the property management teams that you work with. Do you work with a number of different property managers for the properties that you own? Could you talk about some of the success traits that you've seen for a great property management relationship?
Totally. I think first and foremost, like communication. Number one is communication. If they're doing stuff in the background, that's all fine, well, and good. And I'm very appreciative that they're doing it. But if I don't know about it, I'm going to be anxious. I'm going to be calling. I'm going to be following up, because I'm very much a control freak being an engineer. Like, I know that no one's going to take care of my properties as well as I would take care of my property. So I want to make sure that this person or team of people are treating my property like their property. And so I'm checking all these boxes. I'm taking notes. I'm making sure that all these things are getting done. And so if I don't know that's going on, it's like doubling my efforts. Mm-hmm. And how stupid is that? Like, I could just go do it myself. Why do I have to pay someone to do it on my behalf? So communication, number one. And number two, I would just say, is like local market knowledge. Anybody can go start a property management company. But if someone like really understands the local nuances of the market, it can just blow the investment out of the water. And thirdly, I love working with property managers that are also real estate agents. And there's really, the reason behind that is, I always joke, you date real estate agents because it's very transactional. You can do a deal together, and then if it doesn't go well, they could be off to the next person. You might never hear from them again. But you marry a property manager. You're in that together. And so if that person is wearing both hats, well, if the real estate agent sells you a headache and you're using a different person for property manager, the property manager has to deal with that headache. Yeah. But if they're the same person, they're not going to want to sell you a headache. So it kind of, you're hitching their wagon to your horse, so to speak. And so that's something that I always like to look out for. Not a requirement, but if a property management is also an agent or vice versa, they definitely get a couple extra points in my book.
That's what we say at JWB. The same person who's selling you the property should be the same person that's collecting the rent.
You talked about this idea of this illusion of control and the need for it. Can you talk to me a little bit more about how you think about control these days?
Yeah, so it is like, I think control is this total illusion, but from like an asset standpoint, I think that there is such a higher degree of control when you compare it against other asset classes or other investments. Like we were talking about the stock market, and the companies could be anywhere in the world. They could have offices wherever. And like the three of us really can't affect the stock price of any company out there. Maybe we could argue, okay, we bought a crap ton of stuff on Amazon. The Amazon stock goes up 0.2%, whatever. Like, that's not going to happen.
My wife might affect the Amazon stock price. I don't know.
Oh, that's too good. But versus like in the real estate world, if you do things to the property in alignment with like working with a property manager, with an agent that add value to the property, there is a much higher degree of control, I would argue. Now, of course, markets go up, markets go down. And in the single family space, If your neighbor's property sold for 200 grand, the property across the street sold for 200 grand, I don't care if you have a gold-plated toilet in your house, it's probably only going to sell for 200 grand. In the commercial space, because we're valuing properties based on cap rates and NOIs, that's a little bit different. If your property performs way better than mine, it's more valuable, even though they could be next door to each other. So there is just, I think, a much higher degree of control that someone has on the underlying investment itself, as opposed to alternative investments. And as a control freak, that's something that I like, as opposed to just being a participant on a roller coaster, strapping in for the ride.
I love it. I mean, that's when we talk about why you should be buying this property with JWB, we talk about how we want to control the things that we can control, where we largely talk about rent collection. We talk about keeping low maintenance and vacancy costs, right? We talk about those things because that's what we have a high degree of control over. We know tax savings are going to happen. We know principal pay down is going to happen. That's built into it. But then when it comes to something that we don't have a high degree of control over, you talk about home price appreciation. That's why we say, listen, you've got to hold on for a full market cycle to be able to enjoy that, to be able to benefit from it. It's because no matter how great of a job JWB does, if you're only holding on this thing for 3 years, you're more in the band of what is going on in the very short-term economy and real estate market, and less what JWB can do for you. If you hold on for 10 or 20 years, you just got to ride that wave of what growth has done in that entire market, and it's going to become cyclical. So there's two kind of like, I look at rental property investing as two different ways to make the decision. There's the things that are controllable, and you set yourself up for success when you have that, call it real estate agent and property manager linked together. They're the same person or the same decision-making entity. And then, you know, the appreciation thing, depending on your horizon, that's really where you can kind of bet on it or not.
Totally. And I mean, if you look at a graph, like what real estate's done over the last 30 years, like it's up and to the right. Like if you pick a long enough time, right, it's up and to the right. And so if you start zooming in on the graph, of course you can find when things go down. But like you mentioned, if you're in it for the long haul, like it's going up and to the right.